Today, I'm up over $224,000 trading. And this right here was the trade I ended up taking. The trade I took on live where I caught over a 10R trade. A 10R trade. Probably one of my biggest trades I've alerted in my Discord and my community in a while. The markets have been absolutely volatile recently, and today we'll be going over exactly what caused me to take this trade. My bias, my look, and my execution. So with that being said, let's get right into it. First things first, I want to briefly go over the bias in terms of how we came into this idea of taking a short. Well, if you look at price here, coming into the open, believe it or not, although we caught a short, I had a bullish bias. That was my narrative for today. I did want to see upside in the market. And the reason was because we saw an overnight sequence where price was relatively bullish and we had a nice buildup, constantly creating higher lows and seeing price come up here and distribute past these bearish imbalances. That on top of the factor that we had seen some bearish S&T off the highs as you compare NQ and ES here before the New York Open. We had a high in ES which was made at around 11 a.m. on Monday where we ended up seeing a lower high being formed. Mind this wick again, this was after open. And on NQ had taken out that high. So if we reference a smaller time frame real quick and we see what we mean, well, if you go to the 5-minute time frame and you see when we took out this high precisely, NQ ends up taking this high here at around 9:05 a.m. So this is before the open. ES at 9:05 a.m. and relative to the high does not end up taking out that high until after the open at around 9:45 a.m. Eastern Standard Time. So we have some bearish S&T and we see price offer a potential move back down. So you have a bearish indication there in price for the market. And the reason I kind of mentioned that was because I wanted to see price off the open through our opening range move traded to a bearish state. So I wanted to see price come down here off the open through NQ, and I wanted to see price ideally come into London low. So although I was bullish, I wanted to see a bearish sequence because I wanted to see the opening range move come down here, take out a gigantic area of sell side, and then see a sweep back up for a potential long riding continuation of what sentiment has done overall. So again, higher time frame outlook, bullish. And what I wanted to see was that S&T that we talked about getting violated. And then I wanted to see overnight price continue to do what it was doing. And then I wanted to see the opening range move, which would be classified as New York price, to continue doing what it was doing after coming down here and taking out sell side. We've had many textbook days, and this would have been A++ had we came down here, seen London lows get taken out, and then seen a push back up. However, in hindsight, well, what we ended up doing was seeing a push into that S&T, which we invalidated, right? We saw price immediately come back up, and we ended up seeing price immediately trade into higher price. So for me specifically, I was entertaining the fact and upside, and one of my first ideas for the day, which did not end up confirming, was a take that we had in mind on a long. And this was the trade here. It was on ES. And the reason you see me look to go ES here, by the way, is because of the fact that ES was leading between between both assets, ES and NQ. Right? Reason you're able to tell that? Well, if you look at London highs here and you see ES, you could see ES off the open, excuse me, was very directional of where it wanted to go. If you look at NQ here off the open, well, that candle here at 9:30 a.m. Eastern Standard Time was a bearish candle. However, ES's candle was bullish, right? 9:30 a.m. Eastern Standard Time. You see, it actually end up closing a bit of a doji, but this indication tells you that price off the open has divergence as we've had similarly in the past couple trading days, and then we see price end up trading higher. This is the idea here, and the idea was to ride back into this 4-hour gap CE and 4-hour gap fill. Stop was this 1-minute wick low, or this 1-minute candle wick low, and then ultimately going invert off this 1-minute gap. That was the idea, kind of a continuation take, building on that higher time frame outlook. However, we end up seeing a sell back down in the market, and this trade never ends up confirming, as I do end up saying that, right? Never confirms, and you never see me mention that I am long in the Discord, but then you end up seeing me pretty much say this. Interesting open. Had bearish S&T off the open, plus divergence. Then we invalidated the S&T, bullish sequence, by the way, to then meet a sell after. Need price to clear up. Good push down to London, watching with you guys and waiting. So essentially what I mean by that is that S&T that we referred to, we saw that bearish S&T get wiped out. So a very bullish confluence, only playing more into that bias. But then we end up seeing price come down here and eventually trade into those London lows, which is what we initially wanted as the opening range move through the New York Open. So for me, recognition here, what caused this sell? Well, if you look at the daily time frame, we had a daily gap, which we saw price come into play, right? This daily gap to the start of here and the end of here, where we came into this daily gap and we had seen price come right back down. So that was a cause. And so for me specifically, all I was doing here now is I didn't have A plus bias. Bias was very clear. And that's okay. You have to remember, chat, sometimes your bias isn't going to always be there. You're not going to have a bias every single second of the market. And I was a bit neutral here. I don't know what was going to happen right here. But we ended up getting clarity as price eventually comes down here. And after being patient, we see price run London lows. Excuse me. And you see price ultimately showcase interest in driving lower. And so from here, once London lows were ran, once that daily gap got tapped into and we saw a higher time frame and an opening range move look here, once the slope got taken out and showcased no hesitation in flipping back up, that told me, okay, draw interest in Asia lows are likely here. We eventually end up seeing that happen. We come down here and we eventually end up aligning the stars, right? Multi-time frame alignment, higher time frame daily gap. And then you see price see a good sell-off through New York, lower time frame. We then were simply waiting for a retracement in the market to potentially capitalize. Now, this trade here was not A+. The reason you don't see me up millions of dollars today is because of the fact that this trade here was an A++. The trade I took on Friday was a bit more through overnight, and then New York, this was not that. So I took standard risk, put $20,000 of risk on this trade, and you end up seeing me take this trade here at confirmation, which confirms at 10:30 a.m. Eastern Standard Time. Stop loss could have been relative high here easily, but I ended up placing this 1 minute wick high just below it, just because I felt if we saw price come back up and take that high out, there was a good chance of invalidation even higher. So we ended up seeing price come down here, and we ended up seeing price consolidate, come into drawdown, but then eventually we meet the move into Asia lows. That was take profit 1 on the low was the hourly gap fill, about a 1.1 R. That is when I trimmed on my consistency accounts on my prop firms, and then you end up seeing me look to ride the rest of this out on my personal account. We then see prices continuously go, and similar to Friday, we just kept on dumping and dumping and dumping, creating lower highs and seeing price push down. And you can see as I alerted this trade here, right, and I said, right, potential short and play, boom, shorted, right, mentioned I am short, and then you see me mention my targets. Every time something significant happens, or every time we hit a TP or trail stops, you always see me mention that, all the way until the point where we end up seeing this trade come down here and move a 10R. Trailed my final stop, and we ended up getting trailed out here at 28,541 for about a 7.5R, if I remember, on the personal account, a 10R TP trade, and you see a beautiful move in the market where you end up seeing me make around $224,000. Again, reason being, I was up around, my risk was around $20,000. And then you combine the factor with my other accounts combined, 224 on the day. Realistically, if I did size how I did on Friday, I probably would be up. How much would I be up today? Maybe over half an M on this trade. But again, like I said, I took standard risk, and we ended up taking a good move on this trade. Still very blessed, right? $220,000. I mean, chat, why am I, there's nothing to complain about that. So yeah, awesome day. With that being said, gonna wrap it up here. Hope you guys liked my hat and the review, TPT, and see you guys in the next one. Peace out.